How to craft winning algorithmic trading strategies. If you are interested in algorithmic trading, you might wonder how to create strategies that can consistently beat the market and generate profits. In this video, I will share with you some tips and best practices that can help you achieve this goal. Point 1. Understand the market ecosystem. A deep understanding is your strategic advantage. The first step to crafting a winning algorithmic trading strategy is to understand the market ecosystem. This means knowing the players, the rules, the dynamics, and the trends of the market you are trading in. By having a deep understanding of the market ecosystem, you can identify the opportunities, the risks, and the challenges that your strategy will face. You can also leverage your knowledge to design a strategy that suits your objectives, your risk appetite, and your trading style. For example, suppose you want to trade US equities using a momentum strategy that buys stocks with strong recent performance and sells stocks with weak recent performance. To understand the market ecosystem, you need to consider factors such as the structure of the US equity market, such as the number and types of exchanges, brokers, market makers, liquidity providers, and other intermediaries that facilitate trading. The liquidity and volatility of different stocks, sectors, and indices, which affect the execution speed, cost, and slippage of your trades. The regulation and compliance requirements that govern your trading activities, such as the Securities and Exchange Commission, SEC, rules on short selling, margin requirements, order types, and reporting obligations. The competition and innovation in the algorithmic trading space, such as the strategies, technologies, and tactics used by other traders, both human and machine. The macroeconomic trends and events that influence the US equity market, such as interest rates, inflation, GDP growth, unemployment, trade wars, and geopolitical conflicts. Point 2. Simplicity is sophistication. Complex strategies often crumble under real-world conditions. The second tip to crafting a winning algorithmic trading strategy is to keep it simple. Simplicity is sophistication when it comes to algorithmic trading. Complex strategies often crumble under real-world conditions because they are prone to overfitting, curve fitting, data snooping, and other biases. They also require more data, more parameters, more testing, and more maintenance. Simpler strategies are easier to implement, test, debug, and optimize. They are also more robust, adaptable, and scalable. For example, suppose you want to trade Forex using a trend-following strategy that uses moving averages, MOS, to identify the direction and strength of the trend. To craft a simple but sophisticated strategy, you can use Occam's razor. Instead of using multiple MOS with different time periods and weights, use one or two MOS with simple arithmetic or exponential calculations. Use Pareto's principle. Instead of using all the currency pairs available, focus on the major pairs that have the highest liquidity, volume, and volatility. Use KISS principle. Instead of using complex indicators or signals to confirm the trend, use simple price action patterns such as higher highs and lows or lower highs and lows. Use solid principles. Instead of writing a monolithic code that does everything, write modular and reusable functions that perform specific tasks such as calculating MOS, identifying trends, placing orders, managing risk, and logging performance. Use dry principle. Instead of repeating the same code for different currency pairs, use loops or arrays to iterate over them. Point 3. Constant refinement. Successful algorithms are not static, they evolve with the market. The third tip to crafting a winning algorithmic trading strategy is to constantly refine it. Successful algorithms are not static, they evolve with the market. Markets are dynamic and ever-changing. They are influenced by various factors such as technology, regulation, competition, innovation, etc. Therefore, your strategy needs to adapt to these changes and stay relevant and effective. By constantly refining your strategy, you can improve its performance, reduce its drawdowns, and enhance its edge. For example, suppose you want to trade commodities using a mean reversion strategy that exploits price deviations from a long-term average. To constantly refine your strategy, you can collect and analyze data. Collect historical and live price data for various commodities such as gold, oil, wheat, and copper from reliable sources such as Bloomberg or Quandl. Analyze the data using tools such as Python or R to calculate descriptive statistics, Plot charts, perform hypothesis tests and identify mean reverting patterns. Backtest and optimize. Backtest your strategy against historical data using tools such as Strategy QuantX or MetaTrader to simulate trading conditions. Measure performance indicators such as return, volatility, drawdown, Sharpe ratio and maximum adverse excursion, MAE, and optimize parameters such as lookback period, entry threshold, exit threshold and position size. Forward test and validate. Forward test your strategy against live or simulated data using tools such as TradingView or NinjaTrader to monitor market movements, receive real-time signals, execute trades, manage risk and validate results. Deploy and execute. Deploy your strategy to a live trading environment using tools such as IBKR or Oanda to connect to brokers, exchanges or other liquidity providers. Execute trades automatically, efficiently and securely, and handle contingencies such as slippage, latency or disconnection. Review and improve. Review your strategy periodically using tools such as TradeStation or Excel to generate performance reports, charts and dashboards. Assess results against benchmarks or goals. Identify issues such as overfitting, underfitting or parameter drift, and improve quality by making changes or enhancements. Conclusion. Algorithmic trading is an exciting and rewarding field that requires creativity, discipline, and skill. By following these tips and best practices, you can craft winning algorithmic trading strategies that can outperform the market and generate consistent returns. Happy trading!